Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name is Aaron Edwards with Santos Springs. Today is August 19th, 2025, and it's time for our weekly recommendations and analysis video. Before we get started on the analysis part, we always want to start with the kind of that call to action. Make sure we have that bias towards action. And this week, let me check the box. No action recommended unless you are behind on soybean sales. So when we get into the soybean analysis part of the video, this will make more sense. But mainly on new crop, if you didn't sell back in June when we were recommending sales, or maybe you felt like you should have sold a little more, you weren't sure if you were going to have a crop, but then now you're thinking you're going to get the rains and you wish you had sold a little more, we might have a second opportunity here in the soybean market. And that's the only thing in my mind that is worth capitalizing on at this point in time on this week from a grain marketing standpoint. So let's jump in and let's look. First, we're going to look at a weather map. Then we're going to look at soybean market, corn market, and so on and so forth. So let's start with that weather map. This is the, let me get a marker up here and we'll go with red. So it's not showing up here, but this is the 1 to 7 day forecast, the GFS model. And what I wanted to highlight on this, let me see if I can do this in black. There we go. If we kind of look at the corn belt, and it might be cutting some people out, but let's kind of draw a rough pattern of the bulk of the corn belt. That catches the bulk of it. There are some areas, we'll make those, and it's going to be confusing. We'll make them in yellow. There are some areas that are expected to basically get plenty of rain. Not much news there, plenty of rain. And then in red, there's some areas that are, 1/10 of an inch or less of rain. And that's a little bit worrisome, at least from where I'm sitting. I would think it's worrisome. So you're looking at the fields, you're scouting, you know what your crops look like. Maybe you're saying, no, Aaron, my beans are fine. They're going to be fine unless something really bizarre happens. And maybe you're saying, listen, 1/10 of an inch isn't going to cut it. This is not enough. It's hot and dry and windy, and I need more than that. So feel free to send an email. Let me know. Region to region. In your backyard
what it's like. Generally speaking, I think what I just said is the opinion of the market is it's looking like there's probably enough rain to kind of close out the soybean crop, but it's not guaranteed yet. So that's kind of where it's not really bullish, but it's not really bearish either. We're going to talk a little bit about how that looks like on the soybean chart, but first we just go back to the pyramid, the fundamentals. Good grain marketing is a combination of the needs of your farm with market opportunities. So we got make a plan, portfolio, make sure that recommendations are tailored to your day-to-day. Based on that, recommendations from a market standpoint, we look at seasonals, fundamentals, position of the funds, technical analysis, and that gives us our call to action, which in this case, in this week, our call to action is limited to the soybean market if you haven't gotten the pricing work done that you needed to on a previous opportunity. So let's look at soybeans. Let me pull this up and get a marker. I'm thinking blue is going to work well for us. Blue, there we go. So basically good news, soybeans they started on this kind of path to being sold, and then the report last week kind of said, oh, maybe we don't want to be too aggressively sold. So speculators are still net short, but they reduced it a good deal. They reduced, I don't know off the top of my head how many contracts, but they were they pulled back on the oversold, instead of being oversold, they pulled back on their sold position a little bit. If we look at kind of 50,000 contracts long to 50,000 contracts short in that range, you could see that we have really spent, since October of last year, we're almost at 1 year. We're in August here. Since October 1st, we're about 6 weeks shy of being almost an entire year where the bean market has really just been a little bit long or a little bit short. And then it was looking like maybe we would tip the scales 2 weeks ago on the report. And then we got a friendly report, on the COT report. Then we got a friendly report from the USDA last week. And sure enough, speculators kind of went back to that comfortable area where they've been a long time. What does that look like from on a new crop, November soybean chart? And basically, if we want to look at the lowest point of that 970, that's kind of this lowest price level, all the way to the highest price level. We're just going to do this at 1070 for the sake of simplicity. It's not the exact price tick, but you'll see it catches it pretty close. 970 to 1070, the midway point of that would be 1020, right in the middle of the range. Giving a screen, let's try that again. 1020, the middle of the range would be the midway point for that. There we go. So that basically shows us where we are on the soybean market. We're just a little bit above average of where we've been basically the last year. What to do about it? And here's what I'm saying. If you are behind on soybean sales, is there a chance that we get a friendly rally? Sure. We could absolutely go do $11 or beyond. Everything's possible in the grain market. That being said, possible and probable, I want you to think about, we've spent a year in this range-bound trade. And what do you think when we get up here? Let's say that we get another 15 cents out of this, another 20 cents. Let's say that we get a friendly trade this week and we're right up there. What do you think is likely going to be the narrative at this point? If I were to guess, I'm thinking they're saying Brazil. Oh, Brazil's going to have record acreage again. I'm thinking they're saying U.S. farm selling. farm selling. I'm guessing they'll say, hey, it's actually going to rain, so we are going to have enough beans. And so the point that I'm trying to make is, do we have enough friendly news out of this soybean market for us to break out of the range where we've been trading for the last year? And I think we will be hard pressed to do that. If you look at the average, a lot of our new crop was priced in late June, which would be an average price right around there, those 2 weeks. Maybe do that a little bit better. It was basically these 2 weeks is when it was priced. Average price is probably about right there. We're basically back up to that. It's probably a little bit worse price now than what we recommended because basis has softened. So a little bit less, maybe 10, 15 cents less on the futures price, and then a little bit worse on the basis. So it's probably not as good of sale where you are, it's probably not as good because in most places it's not as good. But again, if you're behind on soybean sales, number one, you're above, on the upper side of the average. Number two, man, if you'd get just a little bit more of something out of that market, get you into that, firmly into that top third or top of that range. And the final thing for me is I actually think there's a chance we rally. I think that there's a bigger chance that we come back down here somewhere closer to $10 with harvest selling pressure. That's kind of what I'm looking at, unless we get something real surprising. So the word of caution on the soybean market is if you are behind on sales, I would play a little catch up on that new crop because I think it's more likely that new crop beans are closer to 10 than to 1070 when harvest rolls around. All right, let's stop sharing that. Let's shift gears and let's go to corn. Corn. Well, it's not, the title of the video is, well, it's not bearish, right? So kind of maybe grasping at straws. We got the green marker here. Let's actually switch that to red. And here's the thing, if you look, there's been times when the speculators are oversold, and we are in one of those times. And there have been times, like back in February when they were overbought. We are still in that oversold category, which how low can you go is the question. And when will these speculators change their direction? Besides being oversold, we also have speculators from last week. They actually reduced, draw that a little bit better. They actually they sold more. They added selling pressure to the market. What does that look like from a chart standpoint? And I wanted to show two corn charts. The first one this is just a price continuation chart. So it's the price of corn on the nearby contract. When one contract expires, it goes to the next one. And the big picture that I wanted to show on this one is this is the $4. I just wanted to show $4. The straight line there. There we go. Under $4, prices don't feel very comfortable. We have not spent very much time under $4. You could say the same about over $5, right? Over $5, we really only had one opportunity over $5. But most of, corn has spent most of its time between $4 and $5, which in all fairness is a very wide range. But what should we do here that we are under $4? Probably just wait. Is it going to go lower? Probably not. And then let's look at the December corn. How optimistic can we be about the upside of this corn market? The first thing that needs to happen is we need to get up above the 20-day moving average. Here's the 20-day moving average. The first thing that needs to happen is we need to work our way above that. And then we have we have a couple of things to look for. We have this gap right here. So around that 430, we have a gap. And then we have this resistance of the 200-day moving average coming down, which is probably around that 440 mark. When harvest rolls around, I think that, or let me phrase it this way. Any rally that we get, any friendly trade, I think shorter term, getting too much above that 430 or 440 range, I think we're going to be hard pressed on this side of harvest. Once harvest comes and goes, and once we have the corn tucked away in the bins, then all bets are off. But over the rest of August, September, first part of harvest, basically the next 6, maybe 8 weeks, I think we're going to be hard pressed to get much of a rally, and we have quite a bit of resistance to work through around that 430, 440 mark on new crop corn. I think we're going to be hard pressed to get much better than that over the next, say, 6 weeks. Not impossible. Everything's always possible in the grain market, but I would be surprised. All right, with that, we're going to shift gears and go to kind of our summary, right? We're going to wrap it up. And there we go. Seasonally, corn is neither a buy or a sell. Soybeans are neither a buy or a sell seasonally. September, it's a buy. So we're pretty close to being able to buy from a seasonal standpoint, but not there yet. Managed money for corn is a buy. For the beans, it's neutral. Yes, the speculators are sold in the bean market, but they are not oversold. In the corn market, they are oversold. The trend for corn, it's still down. It's still a downtrend, but it's kind of getting close. I mean, they're testing that 20-day moving average. That's what I use to say uptrend, downtrend. And for soybeans, we are in an uptrend. So a little bit worse situation for corn than for beans from a market standpoint, or maybe say corn is a little bit closer to a buy than beans. But I still think the calendar, if we have a selling opportunity, or if you're behind on beans and you want to move some more beans, I think that's going to be short-lived, especially if we rally another 15, 20 cents. I think selling pressure on the bean market's going to keep it down. And I don't expect a big rally out of corn anytime soon. Basis. Basis levels are a bit softer than they have been over the last few weeks. In some regions, they have already switched to new crop basis. And I assume the rest will follow shortly. Technically speaking, soybeans have a chance to make a run at the June highs. But I believe there will be significant resistance at or below this price level due to selling pressure from farmers. The corn market has been uncomfortable under $4 over the last year. But there is significant resistance levels to face on the way up. A gap at 430 and the 200-day moving average pressuring markets around the 440 mark. Also, no questions this week, but to wrap up, I also want to make just a small comment on the selling pressure. Even if there is not selling pressure from U.S. farmers at 10, 15 cents higher, there very likely will be selling pressure from South American farmers at that price level. That's a price level where a lot of them, especially with a little bit stronger basis bids that they're getting, they're worried about their price next harvest. So for them, it's time to start pricing their new crop, or maybe they already have started pricing their new crop. So if we say, hey, we're at the upper end of the range we've been trading at the last year, you have a decent bid, can we get you to sell? Even if there's not significant selling pressure out of the US, I expect there would be selling pressure out of South America. So I'm not convinced that beans will be able to break out of their almost year-long price range on any friendly news short term this week. That being said, if they're not going to break out of the range and we're at the upper end of this range and you are behind on sales, play catch up. If you have sold, then honestly, chances are you're in a better position than what you have right now, or at least as good or very similar. So that's the rundown and the analysis for this week. Hope you have a great rest of your day. Hope you have a great rest of your week. Enjoy the good crops. I hope it rains in your neck of the woods. There will be opportunities down the road. We're just coming into harvest, and it's tough to get too excited about pricing just right shortly before harvest or even through harvest. So get the equipment ready, take care of the crops. Let's pick a good crop, and then and we'll deal with the markets on the other side of this, unless we get some opportunities that are abnormal short term. Have a great rest of your day.